Well, that was the day so far. You're with us here on Closing Bell. I'm Prashant. With me, Reema here in the studios, and Nigel, as always, from the newsroom floor. Guys, hi. Last hour of the weekend. That's the right expression, Nigel. Absolutely.
I think that expression should be reserved for me this week. I'll give it to you probably after 2 weeks. This one belongs to me.
IT to metals, huh? Yeah. IT right at the beginning and metals a little later in the earnings calendar, but
it's much later actually, Prashant. Reema starts it, and when she's nice and easy, I'm the one that's struggling. So yeah.
So Reema opens it and you finish it, right? I mean, that's the earnings season. All right, so what do we have? The market is basically testing an important, I mean, not an important support, but basically the first support that we highlighted, which is nothing but the 38.2% retracement of the September high to low, which is 17,262. We are at 17,234, so actually it's not testing, it's broken it. But let's see, I mean, there is an hour to go and things may change, but that has definitely been tested. I mean, it'll be a good thing if it holds after such a euphoric kind of a start. If the market gives up more, I mean, you'd go you go into the weekend on a slightly weakish note as compared to how things were in the first half of the session. Global markets have also calmed down. I mean, till the point Asia was trading, things were very jumpy. I mean, you look at Asian market closes, 2.5%. But I think what has happened is that US equity futures have also turned slightly south. They're, I checked 5 minutes back, down about 1/3% or so. And European markets are up between 0.5% to 1%. So that's like a more nominal kind of reaction. And I think when cash markets open in the US, any potential follow-through will be important to note because when we come back, I mean, I think that'll be what we'll come back to on Monday. Big 5% move from intraday lows, and a follow-through will most definitely put bulls here in the front seat, driving seat. Not that they're not, but I think will only add to the confidence that this was not just a one-day wonder last night and that there is more to go in terms of this short covering, short squeeze, whatever you want to call it. On Sunday, this Sunday, you got an important event out of China, the 20th Party Congress in China. We can talk more about that, but basically this is the most important political event in the Chinese calendar, at least in the last 5 years. Some are saying in the last 10 years. President Xi will perhaps get a third term, a status elevation. From a market standpoint, I mean, he'll make a speech, by the way, on Sunday. And from a market standpoint, the only thing what matters is if there's any change in terms of the zero COVID policy they've been following, and they pivot. Pivot has become a bit of a favorite word. But that's essentially what markets will watch out for. Reema, hi.
Hi, and that will have implications of the flows, right? India has garnered a disproportionate amount of the emerging market flows given its outperformance. Year to date, we've outperformed the Chinese markets by close to about 14 to 15%. So if, on Sunday, and, the speech which follows gives you a sense that, perhaps China is going to be focusing a lot more on growth and growth picks up over there, who knows if, the flows may reverse, right, given the valuation comfort that China offers vis-a-vis the Indian markets. But for our own markets, we've slipped from the top of the trading session. The Nifty slipped close to about 100 points from the top. And a lot of the IT names, they opened out with considerable strength, but from the day's high, we've seen most of these large cap stocks slip close to about 2 to 3% If you pull up the intraday chart now, or Wipro, TCS, you would see that from the day's high, a fall of close to about 2 to 3% Infosys is holding up in the green still and going strong with a 3.5% up move. But again, from the day's high, there has been an element of profit booking coming through in all these IT names. But next week is also going to be a big one in terms of earnings, and it's spread across various sectors. So next week, we've got ITC. That's, the IT stocks and how they've slipped from the day's high. Just to, give you a sense of the kind of profit booking that we've seen in many of the IT names. But talking about next week's big earnings, you've got Bajaj Finance, ITC, ACC, Asian Paints, Axis Bank, Reliance comes out with its earnings on Friday. That's the 21st post-market hours. And then on Saturday, you've got ICICI Bank. So the weekend which follows, the Monday which follows, is going to be very, very crucial. Let's quickly tell you who this week belongs to. Despite the profit booking seen in many of the IT names, IT stocks like HCL Tech and Infosys still go home with gains for the week. But Axis Bank is the biggest winner this week with a rally of close to about 6%. And on the losing side, deep cuts seen in Wipro, Wipro's down close to about 7.5%. There have been sharp EPS downgrades post this earnings. And considering the other three IT stocks did well, their numbers were resilient, Wipro stands out as a bit of a sore thumb this time. SBI Life, Divi's Laboratory, Asian Paints too, seeing pretty nasty cuts this time. Nigel?
Well, that's right, Rima. It's got very volatile in the last 1 hour or so. And as you said, the Nifty has taken a couple of knocks just in the last 45 minutes or so. Otherwise, it was a good trading session. The bulls would have been feeling quite good. The intraday dip twice got bought into. Once at around that 17,240 odd, we did see an intraday dip. But that low in the last 10 minutes or so, that was 17,012. From there, we saw a bit of a bounce. That as well as got sold into. So, you like the Nifty actually to at least end above the 17,200 odd. Remember, we have the 20-day MA at around 17,275. For bulk of the trading session, we were trading above that particular level. So, you'll want that level, the Nifty to get as close to that level as possible. On the option side, the call writers were taken to the cleaners earlier. Let's see how the final hour of trade shapes up. But the 17,000 call, the 17,100 call, on both those two, if you look at it, the open interest is down sharply, while the 17,300 put is seeing a fair bit of build-up. That's telling you there is some writing out there. And the premium out there is around 200 rupees. So that's giving you a sense that around the 17,050, 17,100 odd, the bulls will like to take a bit of a punt. The Nifty Bank as well, very, very important. Remember, it's trading above the 20 as well as the 50 DMA for bulk of the trading session. Close somewhere around this vicinity will be helpful to the bulls as well. But plenty to talk about before we get into that weekend that we've been waiting for. Let's run you through all the top stories that we're tracking for you and also what we have lined up on the show. Well, it's a good day of trade for the Indian markets. The key indices, well, they notch up gains of close to around 1.5%. All sectoral indices trade in the green, led by financials and IT. The mid-caps are relative underperformers in trade. We'll place a spotlight on some sectors today. How to play India's IT, agriculture and consumption theme. We'll take you through Old Bridge Capital's Kenneth Andrad's views and what he makes of these sectors. Federal Bank gains on the back of a solid showing in the second quarter, led by robust loan growth at 15-quarter highs and strong improvement in its asset quality. More details lined up. And finally, we'll take stock of the market and top sectors and stocks to remain invested in with our Alpha Manager of the Day, Harish Krishnan of Kotak AMC. All this and more in the next 60 minutes on